If you're looking to scale up right now, optimize performance, and acquire a skill set that allows you real freedom of choice, whether you want to travel the world or spend more time with family, then you're ready to schedule your call in now. Hi, I'm Ludlow, founder of the 5D program. I help people level up their cash flow and build a risk-adjusted portfolio across multiple asset classes. Now, stick around because I'm going to be taking you through my 7-step framework detailing exactly how I do this. So before we dive into the framework, just so you know, within the 5D program, we predominantly focus on buying businesses and cryptocurrency while practicing good risk management and asset protection strategies. Now, we use a very simple framework and what I like to think is easy to understand methods. We don't overcomplicate what does not need to be overcomplicated, right? And look, even if you've never run a business before, or you already have a significant investment portfolio, whether you do or don't know anything about cryptocurrency, buying businesses, or any other asset class, right? Our program is suited to anyone who's looking to scale up, right? Now, to be a high performer, we have to do what high performers do. So after 10 years of investing, multiple 6 figures on my personal education and personal development, one thing that, really didn't sit well with me was all these masterminds and programs that, I had previously signed up to. I felt all overpromised and underdelivered, right? Which was very frustrating for me. Most of the time, it wasn't even the content that was that bad. It was the aftercare and all the unanswered questions. Like I was looking for, one-to-one support if I needed it, a direct channel to get my questions answered, in-person events where I could meet other people, group calls that actually had real substance. Again, the network, I wanted a network that I could tap into of like-minded people. And look, unfortunately, I couldn't find one program that, had all of these different things. So, I developed a framework and I thought, I'm going to start my own, right? And here we are, over multi-7 figures in deals closed within the first 12 months, hundreds of % returns on investment portfolios, and a pipeline now, which is well over 8 figures. All this from this group alone, right? We've had 5D members that have closed deals worth, multi-7 figures within 6 months of joining, right? It's all about how much work you put in. And this group is all about taking action. Feel free to, check out some of the video testimonials below. Also feel free to, hit those guys up on social media. Their links are also below those videos. Just before we dive into this, the 5D membership gives you access to more than just the 5D program. So you also get access to the 5 a.m. club, where we now have over 400, maybe 500 hours of content. You get access to the full Crypto 20, which is our sort of manual in-house crypto index. You get access to our private Discord, where we discuss tons of different things on there. There's loads of channels where you can access different information. You also get access to the 5D exchange, which every single mastermind session gets banked, and you can watch them back whenever you like. There's also how-to videos and some tutorials in there for different things as well. You also get access to our private deal maker group, and also access to all our live events globally too. So, the purpose of this phone call is mainly to see if our values align. This is a private network, and look, I hope I get to speak to some of you soon. So let's dive into the 7-step framework. So in the world that we live in today, with the information overload and all the content that we absorb from the second we wake up until the second that we go to sleep, I believe that it's essential that everyone has their own high-level funnel of some sort. Now, not all the time, but in general, we get to dictate what comes in the top, what gets trapped in the middle, and what comes out the bottom, okay, in general. So if that is the case, then maybe we should start making some adjustments to the things that we consume and the things that we expose ourselves to. So for instance, if you're looking to become a real estate developer, and that is your goal, then it probably makes no sense you following, say, Kim Kardashian, right, on Instagram, Facebook, or YouTube, or whatever it is, right? You need to be dedicated to your goal, and whatever that goal is, everything around you, everything you consume, everything you see on every single timeline needs to relate to that thing that you want to be, okay? So first and foremost, I'm going to mention social media because social media probably takes up more of our time or takes away most of our time from us right now. I'm the same, right? If I pull up TikTok, Instagram, YouTube, these platforms and algorithms, are set to keep users on the platforms, right? So they're going to keep showing you content that you like to see. So we definitely need to put this through our high level funnel. So number one is going to be social media. So social media is going to go in the funnel, and there's going to be parts of social media that's going to get trapped, and there's going to be parts of social media that's going to come out the bottom. Now, you get to dictate which parts. That's the beauty of social media, okay? But that's the first thing that we need to do and go in the funnel. I'll use 3 examples, but like I said, this is going to be personal to each and every one of you. You're all going to put different things in the high level funnel. Now, the next one that goes in the high level funnel for me is going to be friends. Okay. Now, there's going to be some friends that are just going to take time away from you. I know these are your friends and you want to be there for them, but if friends will take time away from you without even thinking twice. And that's because you're friends, right? So, if you allow your friends to call you any time of the day and take time away from you, then again, that's time that's been taken away from you. And time is the most precious commodity, right? So if you want to achieve certain things in life, we really need to get our time management in check before we focus on anything. So friends need to go in there, right? My friends understand my sort of goal and mission. They respect my goal and mission. So, we have an arrangement, and that's the way it is, okay? Now, the last example I'm going to give you here is kind of like the friends. And some people may disagree with me on this one, actually, but it's going to be family. Now, for me, family, I've had this conversation with them. They know that, there's no compromise for me. I have my target, my goals, and this is the way I operate. So, even my own family, right? My own brother will message me and say, look, you're called to schedule in a call. I want to run through something with you. He understands and respects what it is I'm trying to achieve. So, there's no compromise for me. Now, of course, if family or friends needed me, I'm going to drop everything I'm doing and I'm going to be there. But on a day-to-day basis, if I allocate a certain amount of time to what it is I'm trying to achieve, then people need to respect that goal. And I think that this is where you guys first and foremost need to start, is think about it. Yours may not be friends, family, and social media. It could be 3 completely different things. These are 3 examples that I've used for you to get you thinking of what needs to go in this high-level funnel. You really need to start thinking about what you're going to put in the top of this, what stuff you're going to get trapped in there. You're going to make this happen. You're going to trap them in there, and what stuff comes out the bottom, because this is where you need to be. This is your time, and this is your filter or funnel to get you this time back. Okay, guys? So this is the first step, your high level funnel. Start giving thought of what things you feel that you need to start putting in that funnel and what comes out the bottom. So the second part to step 1 is our ABC column. Now, the brain only produces so much glucose per day, so it's very important on how we use it and to make sure we're aware of it too. Now, there's a reason why, usually high-level performers and usually billionaires only focus on a few key decisions per day. So you can't just go to them with some random thing. They really block all this out, kind of like what we just talked about a high level funnel. So our ABC column also needs to be the exact same. Now, I'm going to take you through how I use my ABC column and how I sort of separate my tasks on a day-to-day basis. So just like we talked about in the high level funnel, we need to be aware of distractions, and we also need to be aware of what has our focus and attention. And, when somebody shows me what, they're focused on or where their attention is going, it's quite easy to see, what the outcome would potentially be based on what people are focused on. Now, our A, B, and C column, we need to separate the tasks in these columns to make sure we're being, very productive and also effective in what we do. So our A column is mainly for our key decisions and strategy, right? So these are things that we should personally be giving our time to. This could, be 1, 2, maybe 3 important tasks on a day-to-day basis. Now, you can use the ABC column daily, weekly, monthly, yearly, whichever works best for you. I like to work with this on a day-to-day basis. So, I focus on the key things that need to happen inside my business or businesses to drive them forward. And then the other stuff gets moved down the columns. So column A needs to have 1 to 3 things max in. Column B is going to be slightly bigger. So column B is going to be your stuff, tasks that could be automated, maybe delegated, or stuff that's less important to A, okay? That's going to be in column B. Now, column C is your delegation column. So this should be stacked to the bottom, okay? Now, when I say stacked to the bottom, column A should have the 3, B should be slightly bigger, C should be absolutely stacked. And what you want to be looking to do is moving stuff over from, from A to B and B to C and stack that C column, right? Now, what normally happens, in most journeys of us as entrepreneurs or aspiring entrepreneurs is we usually flip this upside down, right? Or an easier way to do it is swap A and C around. So what normally happens is our A column becomes C and our C column becomes A and our A column becomes C. Now, we think that we're the best at everything inside our business or whatever it is you're doing. And we think that we need to work on everything, all the high level tasks. And, stuff that isn't high level, you put in the high level column because you feel that you can't delegate it because you can't trust anybody to do it as good as you. And, that's one of the worst mistakes we can make as entrepreneurs. And I've done this in multiple businesses when I first started out in business, before I started to build real business acumen and realized you need to hire better people than yourself. And that's how you grow in business. Now, column A usually right at the start looks like column C. So it's stacked full of tasks, okay? Now, when I say this is stacked full of tasks, it's because we wear all the hats. Now, at the start, the A column is pretty cool when the hats are there, right? But then the problem is above each column is you, because you're wearing every single hat inside the company. And the quicker you realize that there's better people than you, like I said, the quicker you will grow. Now, I understand at the start of any journey, before you have capital behind you, you're going to wear a lot of the hats, and that's just normal in business. So don't think that, you're doing something completely wrong at the start because you're doing, multiple different things, because we understand that, look, you need the capital behind you to be able to outsource and delegate certain tasks to different people. So, but the quicker you can do this, the quicker you will grow. But I want you to start thinking of this in every aspect of your life, okay? I want you to start thinking of the A, B, and C column, the high level filter, and really start to, optimize your performance and optimize everything in your life, okay? I want you to really start looking at everything. So this is stuff that's going to be work related, but this could also be health related, relationship related, family related as well. Your A, B, and C columns, we need to start thinking about, what's most important to us in life. And something that a friend of mine shared with me, which I thought was very, very powerful. Now, this friend of mine, he exited 2 8-figure businesses, and he's actually friends with Elon Musk and Richard Branson now, which is insane. He's a very intelligent guy, and he's now enjoying himself traveling the world. And we had a catch up not long ago. He actually spoke in the 5D program on one of our sessions, and he actually said to me, what are you doing to make you happy right now? And I said, look, I enjoy work, so work makes me happy. He said, what about outside of work? So I mentioned a few things around family, etc. And he said to me before, we jumped off the call, he said, look, remember, your diary is a reflection of your self-love. And, that was so powerful to me because, we don't try and fit our happiness in around work. We just fit it in. Okay. And it's just as important. And the one example I always use is, look, if we're focused on our health, most of the time, if we have a very important meeting that, comes out the blue, and we'll slot down our diary and make sure it makes us happen, and we'll skip a meal to go to the business meeting, but we won't skip the business meeting to eat the meal. Okay, so it is very important that we try and make sure everything fits in here. And I'm not here telling you that you need to find work-life balance, because I think that's one of the most impossible things to find. It's very, very hard, but any sort of balance is helpful. Okay, but if we can try and fit this in, and as long as our time management and organization is right, then that is balance. That is a form of balance, right? Understanding when you wake up, what you're going to be doing, what tasks you're going to be working on, at what times of the day. Are you working on a high level task? Are you automating certain tasks and moving them to the less important column? Are you delegating and outsourcing, as many tasks as possible that you don't need to do? Okay. So I will be showing you a diagram soon of some of the stuff that, I've been doing and how easy it is to invest in your time and save a lot of it. Okay, so ABC column, this is part 2 of step 1. So this is the last part to step 1, and we're going to talk a little bit about how to conquer procrastination. Now, being a procrastinator isn't all that bad as long as you are aware that you do procrastinate. Now, if you're a good ideas person that most procrastinators are, then is understanding, being aware, so you can outsource and delegate, which again reflects on ABC column and high level filter. Now, the crazy thing about being a procrastinator is, why you're failing, because you're procrastinating. So I'm going to show you 2 charts now, and I think they're going to resonate with you quite well. So when it comes to procrastination, it's quite important that we approach it, in a certain way. Now, breaking down tasks, really, really helps because otherwise you can become overwhelmed, get distracted, and then nothing gets done. So a good way is, when we first start doing a task, this is obviously the start point, this is the deadline, and then this is the work per day. So what generally happens is, you start off, you have a bit of momentum, so you get a little bit done. But if you break tasks down, you can do a little bit every single day, and then, eventually you get the job done and you tick it off. But the thing is, most of us do it this way. Well, I know I've definitely done it this way before, is I'll get quite a lot of momentum at the start, and then, you drift off this, you go ghost for quite a while. Deadline comes, and then all of a sudden the workload comes absolutely insane, and you put all the work in right at the end. Now, that's definitely not the way to do it, because this adds stress and pressure. So breaking down tasks helps massively when it comes to procrastination, and it all comes back to time management, planning, and really filtering out all of those distractions. So step 2, we are going to look at cash flow first. Now, look, it's all great to have, say, a pot of money there, and everybody likes the thought of becoming an investor. And, we've heard all the different sayings: financial freedom, passive income, financial independence, freedom of choice, etc. But, there's ways to do it, and there's things that we need to overcome to get there. Look, nothing's easy. Okay. Now, if you did have a pot of cash there, we do need to be careful and invest with caution. The reason why I say this is because we see all these different shiny objects or shiny pennies that look great because someone else has found some success in them. But we also have to be aware of, again, back to our personal risk appetite and time horizon. Now, the reason why I say cash flow first is because income and cash flow is the most important thing over anything. You can invest a pot of money into something, but then, unless you find something like, I don't know, real estate or another asset class that you can recycle the money, again, there's no fast way of doing that. But then it's going to be very hard to really generate more cash flow. That's why we like to focus inside this group on, mainly buying businesses, because you're buying cash flow, you're buying income, and then you can use that income to do other things with. So let's hop back into the whiteboard. So cash flow should always be at the forefront of your game plan. Now, cash flow allows you to do multiple things. So cash flow income always comes first. Now, if we have cash flow or income, then we get choice. And with choice, let's just put a pool of assets here rather than saying, mentioning individual assets. Now, we can use our cash flow from, our business or whatever it is we're getting our cash flow or income from. We can put it into assets. And if these are income producing assets, then guess what they do? They generate more cash flow. And then with this, you can continue to recycle back into assets, and they'll just keep generating more cash flow each time. Now, the reason why this is always going to be more appealing than anything else is because, let's say we have one pot. So let's say this is our pot of money, and we need to make this pot make us more money, right? So let's say we invest in a house, say a buy-to-let property. Okay. Now, let's say we use the BRR model, which, if you want to learn more about, you can go into our portal. But let's say we use the BRR model where we buy, refurbish, refinance, and pull all or most of the money out of the deal. Now, what we're going to do is, let's say it's a typical buy-to-let property, and let's say now this property generates us, I don't know, $200 a month. Okay. Now, and let's say the asset is worth, let's say it's worth 100K. So our pot of money that we put into this, let's say we pulled a lot of it out. Yes, this asset is now giving us $200 a month cash flow after all expenses. But, for us to generate more cash flow from this asset, we either have to, change of use and make it into, HMO or service accommodation, or try and change the strategy to increase the income that that asset produces, or we're going to be stuck at around $200 until rents go up. And to generate even more income from a capital appreciation side, we need to wait over time until this asset goes up in value. And this is the same for stocks. Let's say you bought a stock, and let's say you bought the stock, let's say again, for $200. Okay. We buy the stock for $200. We have to now wait until this asset appreciates and the stock goes up. And that could take time. We've seen the stock market move fast. We've seen it move very, very slow. But in general, it's a very slow moving market, and it takes time to really benefit from capital appreciation. As they say, it's time in the markets, not trying to time the markets. And let's say, to make this an income producing asset, we collect some dividends. So this asset chucks off some dividends, and we get a small dividend for the stocks that we own. So this pot doesn't really get us very far. We're trying to put it into different things. Now, of course, there are other options. We could look at, Bitcoin. We could look at different ways we can use DeFi to benefit us. Of course, risk can go up in these different asset classes, a very volatile asset class. So there's different ways we can look at building this pot and generating income from an initial pot. Whereas if we use our pot to go and buy something that is already pushing out a decent amount of cash flow, then this changes the whole game. So let's say now we buy a business here, and we use our pot to buy the business. And let's say this business is now throwing out, I don't know, 200K a year, right? So let's say this initial pot was, let's say it's 50K. We've got a 50K pot here. We used that 50K pot to buy, say, a business, which again, inside the portal, we can show you to use, no money down or very close to no money down, using leverage buyouts to buy businesses. We have people and 5D members inside the group right now that haven't put any of their own money in the deal, not even to pay for legal fees, any professional fee at all, actually, and walked into a business that already had a huge amount of surplus cash in the bank. But we can show you that inside the program, okay? Of course, there's many ways to do this, as there's many moving parts. But let's say we used the 50K as the closing payment, and then we bought this business here, and the 50K was the closing payment. And now this is throwing out £200,000 a year. Okay. Of course, there's going to be, cost of borrowing for finance for this business. Again, I don't want to go into too much detail. I just want to use this for an example, right? So let's say this is throwing out $200,000 a year now. Now you've got so many more options to use this $200,000, and you've really leveraged the 50K that you started with, right? So usually you probably look at this and be like, well, if I can use 50K or less to buy something that's going to generate $200,000 a year, then maybe I'll just go and buy another one of those. And maybe you go and buy another biz, and then maybe another biz. And then as your 200K increases, and let's say now you bought three, roughly the same business, and let's say that's 600K, then that 600K, of course, you can then put that into either maybe income producing assets to generate more cash flow, or maybe you just buy more businesses. Okay. Of course, there's more to this. And, when it gets to, closing a deal and post acquisition, of course, things can be complicated, just like everything. Okay. Just like if you used to buy a property, something could pop up with a refurb. Maybe you have an issue with your general contractors or, whoever's involved in the refurbishment. Maybe you buy a stock and something goes wrong. Some bad news comes out and the stock sells off. Maybe you buy a cryptocurrency and it fails, right? This could happen in anything. This is when it all comes down to risk management, risk appetite, time horizon. My point here is cash flow will always be king. So if you have a pot of money, try and use that pot to buy something that generates more cash flow, especially if you can, more than the pot of money you already have. So really be mindful of what asset class you're going into and what you really want to be spending your time on, because in everything, there's time risk and there's capital risk, okay? And these are two things that are very important to us inside the 5D program. So on to the next step being no ceiling. Now, I'm going to tie this in with a few different things, but I believe there's a few questions that everyone should be asked as a kid. And I think that it would be super beneficial to everyone if they were asked these. Now, number one, the first thing that we should be asked is, look, what career do you want? Right now, when I was in school, I had to pick my subjects in, I think it was year 10 or year 9. I chose business, sports, IT, and science. Right now, I didn't really enjoy school. So, I used to ask questions that the teachers didn't like. So, for instance, my business teacher, I asked her, how many businesses that she's had. And, as you can imagine, that didn't go down too well, which actually baffled me that a teacher has never run a business and they're teaching us business. Right now, look, I'm not saying that they can't do it, because I understand that there is a syllabus that you follow, but I just wanted to learn more. Now, what I actually wanted to do when I left school was be a PE teacher. It was the one subject that really sort of resonated with me and the one subject that I enjoyed. I was also interested in being an electrician, but I'm colorblind, so again, that didn't work out too well either. But then once you choose your career. So me at the time, because I enjoyed PE and sports, I wanted to be a PE teacher. So I think the next question should be, okay, so, what do you want your life to look like in the future? So if, visualize exactly how you would like your most ideal life to look. If you could be the designer, how would it look? And then also who would be in it? Now, of course, we all know that health is key. But if I was asked this as a kid, maybe some of my choices would have been different, right? Actually, they definitely would have been different. So if I was asked when I was 15 to design my life and how I wanted it to look, it would have been nice cars, live abroad, have loads of money, enjoy life, loads of smiles, have my own family, etc. Now, the last part of this to follow on from how you would like your life to look. So we've chose our preferred career path based on what we'd like to do at the time, and now we've chose how we would like our life to look. The next task should be, okay, D, now go out and research the ceiling salary in that career should you never start a business. Now that's super powerful, right? And we're going to jump into some numbers in a sec. But, I know a CFO of quite a large company in the States. He's on a very, very good 6-figure salary with bonuses, but his job demands him work, 70 to 80 hours per week. Some weeks, 100 hours if he has to travel. So when it comes to this task, in my opinion, you have to work backwards. What do you want your life to look like? Then are you doing everything that is required day to day that actually works towards it, right? So let's jump into the whiteboard. So let's take a look at my choice when I was 15 years old, and not taking into account if, the career that I was potentially going to choose would really stack up for the life back then that I wanted. And of course, we're always going to change the things that we want in life, but based on my, ambitious wage back then, I'm going to show you how the career that I chose, because I was not asked the question on the ceiling salary for that specific career that I chose, then I could have potentially, maybe based on my ambitions, wasted 10 or maybe 20 years or maybe less in a role that would never have got me to my goal. So the average salary for a PE teacher in the UK is £36,000. The minimum is around 30K on average, and the max is 43.5K. So technically, my ceiling for this career is 43.5K. That's my ceiling. So as soon as I hit this, that's the maximum amount of money that I can make based on the information that I found on Google. So as you can quite clearly see, the actual life that I would have designed back then definitely would not have aligned to this, because for one, I'd be trading my time for money, And, I wanted freedom, family, travel, money, cars, and all the other different things when I was 15 years old. So if I had seen this, to get to this max salary, of course, you need to put work in as well within your career and work your way to that. So in general, I'm going to be starting off a little bit less and then be around here. It's not a huge difference to over here, but you have to really understand that if I Googled this at 15 years old and then started Googling the cars I wanted, the trips for travel that I wanted to do, the different things, the house that I wanted, and all these different things that, I aspired to get, then I would have quite clearly seen that this figure here probably would not have got it to me. And who knows how long it would have taken to get to this figure. So whatever it is you're doing right now, guys, take a look at it, Google the ceiling of that. Usually in a job, there's going to be some sort of ceiling, and then really take a zoom out and think of what you want to do. And the reason why this is an important task to do is because I want you to make the most of your time and the things that we're going to be covering inside the program. We fast track it at a sustainable level, because, we want to, as gently gets the Bentley, we don't want to move too quick. But, we also want you to exceed expectations in your life. And if you already have a ceiling over the top of you, then, we have to try and remove that ceiling and break through it. And usually the way to break through it is doing something that you get to dictate the terms to a certain extent, but also something that does not have a ceiling. We don't want to be in something and spending time on something that does have a ceiling. We want something that does not have a ceiling, and we can continue to grow and grow and grow. Now, this isn't to say that you neglect your current job or career, because that's not what we want to do. We don't want to go down the whole go and sack your boss sort of talk that I hear a lot of people talk about. Use the resources and generate skill sets and acquire skill sets from inside your current establishment where you work or whatever career that it is that you do, and use those skill sets, and they can be transferable skill sets into something else that will help you. So try and get as close to the money as you can in those establishments, so you start to see the money flow and how it moves around, how it comes in, how it goes out, and all the different people that's involved, and really try and acquire skill sets that you can use when you decide to do something yourself. But most importantly, let's not put a ceiling over our heads, guys. Let's find something that has no ceiling and we can break through and continue to grow and grow. So next up is income producing assets, and I'm going to jump straight into the whiteboard for this one. So I'm going to quickly run through 3 income producing assets, probably the 3 you're most familiar with. Of course, there are loads more, but I'm just going to focus on these 3 now and try and get through this fairly quickly. So number 1, dividend stocks, right? So by purchasing dividend stocks, then you would receive a dividend yield. So you would divide the annual dividend by the existing stock price, and then that would give you your dividend yield. So in general, around 2 to 3% is classed as good, and then anything over 3%, so say 4% and upwards, is classed as a fairly high yield, right? So once you've done this, then you'd probably look at the dividend payout ratio, which is the percentage of earnings that the business pays out as dividends, right? So in general, the higher this is, the less safe the dividend is, okay? Now, if we were to look at, say, a high dividend stock, like, British American Tobacco, they have an annual dividend yield at around 6%. So, as you can see, you can receive income from dividend stocks. So they are an income producing asset. However, this all comes down to the 2 main and most important things, as usual: risk appetite and also time horizon, okay? And also we want to be looking at, what's our return on our invested capital, which is our ROIC. So, our return on our invested capital is going to be a very key metric to look at when we look at any asset class, okay? Especially income producing assets. Now, moving over to rental property, right? Another very desirable asset class and desirable asset that produces income that many investors look at. So, there are many different ways to leverage your capital to increase your ROIC. so return on invested capital when it comes to property, because there are so many different strategies, okay? And look, some are riskier than others. But look, this is another way where you can own an income producing asset just by buying, holding property and collecting that rental yield. Now, of course, the numbers do need to stack to make this worthwhile, right? There are many moving parts to make sure a deal is actually a deal. But in general, in the UK, estate agents would say, 6% is, a great yield on an investment property, right? I beg to differ. I disagree. There are ways that you can get infinite ROI when it comes to buying property, which, I've personally done many times, and I still hold the assets now. So, that's dividend stocks and rental property. Okay. And again, you can approach these in many different ways. So number 3 is staking crypto. So, by staking cryptocurrency, you can basically earn rewards, right? Now, there are risks associated with this, just like there are with other assets as well. And again, there are a lot of moving parts, right? So, you also do need to take into account, do you want to chase these staking rewards and then the asset itself loses value? Okay, so you do have to weigh up the risk reward, because look, you can't time markets, right? Markets can be hard to navigate, but look, the market will always end up dictating the value. Okay, so if you don't know your personal risk appetite or time horizon, the market will tell you where you are at with both. Okay. Now, look, it is essential that you do your due diligence before investing in anything, more so cryptocurrency, because there is only so much due diligence that you can do. Now, look, there's some great income producing assets available to us right now, but a lot of investors miss them and miss opportunity because they're looking for the next moonshot where they feel they can get loads of gains from, right? So we need to have a framework and a game plan and stick to it, right? All emotions off the table, execute the game plan, don't compromise unless you have to adapt, because anything can happen in the market. So make sure you're ready. So the next step is diversification. Now, just to point out before we get into this one, we are looking to specialize before we generalize, okay? So back to our cash flow and income being the most important aspect of all of this, okay? So once we have something solid, then we can look to diversify, okay? And diversification across investment, is done to reduce the amount of risk that you're exposed to, so you can try and maximize returns while doing it. And of course, this does need to be aligned with good risk management. So let's hop into the whiteboard. So when it comes to diversification, it's essential that we break this down into different segments and different layers, okay? All depends on risk. So if we start this off and pull this across to our vault, right? So the vault to me is our base layer where we like to try and maintain our purchasing power or store value, okay? So the first thing that will go in here is probably going to be gold or some silver. Gold having, a 5,000-year history, silver being the king of metals, in my opinion, the second most used commodity in the world. But look, there's tons of stuff on this inside the 5D exchange. So gold and silver would be first. Maybe then we probably look at some, cash reserves, because, depending on where we're at and depends on what sort of economic climate we're in, it's always good to have some sort of cash sat on the side, even if we are in a high inflation environment, because when opportunity arises, it's always good to have some of that power on the side where we can, dump that into the markets and capitalize on certain opportunities. So, and also look, imagine something goes wrong with your career or your business. It's always good to have some sort of buffer in the vault that you can pick at if need to. So in general, probably, 3 to 6 months of income will be a sort of good for cash reserves. Then also inside the vault, we'll probably look at some land. Land is great to own. We're seeing some of, the wealthiest people in the world buying up all the farmland. So, land is also a great asset to hold in the vault, because, over time, in general, land will always go up in value. Now, the next thing inside this base layer, we could even look at some fine art. Now, The good thing about fine art being a great asset, now art has actually outperformed the S&P 500 by I think around 170 something percent from 1995 to 2020. So this is a great asset to hold inside a diversified portfolio. Of course, the barrier to entry is a lot higher than other assets, but this is most likely going to be fractionalized at some point, which is going to make it a lot easier and bring down that barrier to entry as well. Also inside the vault, you probably put in there, some index funds. People like to cost average in to, the S&P 500, the FTSE, the Dow Jones over a long period of time, and, compound those returns. So index funds will be another one that would sit in the vault. And I also think that, you could probably put in here some Bitcoin as well over a long period of time. Obviously, supply is always going to come down. The last Bitcoin being mined in the year 2140, still a long way out, a long-term time horizon to Bitcoin. Cost averaging, just like you would with index funds, could be something else that you may put in your vault or your base layer. Now, moving on, if we was to look at our IPA, which is our income producing assets. Okay, so we just talked about a few of them. So, we can put them in there, but inside here, you're probably going to put in here some, some rental property is usually people's go-to. Now in rental property, you're going to have some subsections too. So you're probably going to look at, some, industrial, probably some commercial, and then of course, residential as well. Oh, let me make that look a little bit better because my handwriting isn't the greatest. Then we're going to look at some residential property as well. So also inside our IPA, in my opinion, one of the greatest things to put in a diversified portfolio is going to be business, right? So the reason why business is great, because of course you're opening this up to then have more income, more cash flow to then diversify further into these assets. And business alone could sit in the middle of this whole thing, and you could use the cash flow that you generate from business to then really filter down through all these different asset classes to build a really solid diversified portfolio. So business to me would definitely be in the income producing assets, because I do believe business is a solid asset. Then another one that we mentioned on the previous video is staking crypto. Of course, you need to really weigh up the risk reward to this. There's some, centralized and decentralized platforms where you can earn some, very appealing staking rewards, but definitely do your due diligence beforehand. But inside the program, we talk about all this, and, we're very cautious when it comes to investing in, especially decentralized finance as well. Then another one we could put in here, like we mentioned, is dividend stocks. We discussed what you could potentially earn from those in the previous video. And then another one that we do see that some people like to invest in is bonds. Now, I'm not a huge fan of bonds personally, but technically they are income producing asset. And probably the next one for me after business that is something that people would generally aspire to become, which can generate some very nice income, is you become the lender. So we live in a world of leverage, right? Now, people like to use other people's money to build investment portfolios, whether it's rental property. People do it across every asset class these days, business, stocks, regardless of what it is, people use leverage to really enhance their overall investment portfolio. So it's great if you can become the lender. So, you would use your money, you would dictate the rate of return that you would like for that money. And then people use your money to put into their sort of investment portfolios. And then you take some sort of security over the investment that the person's investing their money into. So being the lender is something for me. Being an income producing asset, that and business fall under the asset for me, because I believe both of them are great income producing assets. Now, moving on, let's take a look at the next one, which we would call our global layer. Now, for me, in the global layer, I think it's more important than ever right now that we get freedom of movement. So I think that multiple residencies across different countries is a great one to put inside your global layer. Another one in here would be, overseas property. Of course, the UK is going to be the most desirable place to invest in property in the world. However, having overseas property and diversifying into property overseas is also another great asset to put inside your portfolio. And also inside the program, we discuss different emerging markets and where we believe the money is going to flow over the next 10, 20, 30, 50 years as well. So can open up some doors for you to look at, filling out your global layer as well. Now, another one could be currencies. Now, something that we discuss a lot about inside the program is, the emergence of blockchain and cryptocurrency. However, different currencies, holding them inside your portfolio could also be beneficial to you. Now, of course, we've seen like the Russian ruble really sell off and then have an incredible month or two straight after, and really power through with performance. So as you can see, things fluctuate, currencies fluctuate. So you could hold some currencies which could benefit you long term. So currencies could go in your global layer. I'm just giving you examples of what could go into these. Then another one, like I just mentioned, would be emerging markets. So you could invest in emerging markets ETFs. You could invest directly into emerging markets. There's tons of different things that you could do with this, but these are a few things that you could look at to add to your global layer. Now, moving across here, let's have a look at some other things as well that could potentially go into a diversified portfolio. There's going to be things like, wine would go in there, collectibles. When I talk about collectibles, things that you would never generally feel would go in here is like, Pokemon cards, baseball cards, classic cars. Some of these hold serious value and they are store value over a long period of time. You could probably put in here some, rare watches. Some of these watches get discontinued or there's one of ones, etc. You could also decide to invest in private equity. Now, of course, the barrier to entry for this is also going to be very different. Some of these require you be, a high net worth individual to invest in some of this. So that could be an other. And then up in here in our HRL, which is our high risk layer. Now, there's different things that go in here, and depending on usually age, and generally your risk appetite and time horizon would depend on what you would put in your sort of high risk layer. So in here, I know a lot of people may like to trade. So trading could go in here, especially like trading with leverage. Also some altcoins would go in here because you're investing in startups to see where they go. Underneath altcoins, you could look at some IGOs and ICOs, which are two things that we also discuss quite heavily inside the program. And then in here as well, you probably look at NFT art. The reason why I haven't just put general NFTs because there's so much more to NFTs than the colorful JPEGs, but those colorful JPEGs would definitely go in your high risk layer. Of course, you can benefit from capital appreciation and also earning some income. So they could actually be an income producing asset too. However, it's a very illiquid market. So I'd put them in the high risk layer based on them being a very premature asset. Then also in here, you may look at, venture capital. So maybe, that's something that you may want to consider as well. So there's a few different things here in a diversified portfolio that will go in here. Now, as you can see, there's many things that you could do. And these are just some examples that I've run through with you today. So if you want to take a screenshot, take a screenshot or watch the video back. But these are a few examples of what you could put in a diversified portfolio. So the next step is asset protection and estate planning. Now, this is for everyone. It's not just for the super wealthy, okay? Now, it's important to get into the mindset of own nothing and control everything. That's own nothing and control everything. And look, let's take the US, for example, right? People sue over anything and everything over there, right? So over there, it's super important that you have some sort of asset protection in place, but this is just as important as everywhere else. This is a super important part of building wealth. Now, this isn't just about making money, it's also about keeping it, okay? We can make money, but we also need to keep it and protect it, right? But there are many ways that we can protect ourselves when it comes to asset protection and also estate planning. Now, first and foremost, jurisdiction can be super important. So that's something that you would need to take into account. And some of the other things that are worth thinking about, which we do go into more depth in the 5D program, is, you can write a lifetime trust into your will. You need to make sure that the instructions are very clear, especially for whatever it is you want to leave behind. You need to make sure that you have an LPA, so a lasting power of attorney. This can be for financial and also for health. You can look at life policies. Also, if you do, check who's the nominated beneficiaries. Make sure it's in trust. You can look at offshore trusts, segregated portfolio structures. You can utilize UK holding companies. There's many advantages to that, especially if you're looking to retire offshore at some point. Same in the US, same in Canada, same in Australia. But look, asset protection, is seriously important, and the earlier you start, the better. So that's a brief overview of asset protection and some of the things that we look at. But this is definitely one of the most important things in the 7-step framework. So the last and final step is leverage. Now, I want you to get comfortable with leverage, because debt is great if it can be serviced, and it's also important to stress test the debt that you take on. Now, if leverage does get abused, then things can go wrong. And look, we've seen, some of the biggest institutions over leverage and collapse. Just take a look at the Lehman Brothers, for instance. So getting this right is essential. But look, we can use leverage in many things in life. It's not just financial leverage that we can use. So, when it comes to leverage, let's hop into the whiteboard and I'll take you through a few examples. Income equals rate times time. Okay, so let's say you earned £20 per hour, and let's say you worked for 10 hours per day, which would equal to £200, right? Now, what most people do to try and increase their income is, first and foremost, they try and increase their time. So generally they'll try and work more hours to increase their income. The second thing you can do is try and increase the rate, okay? So either try and work more hours, or then you can try and increase your rate. However, it's not as easy to increase your rate depending on your circumstance, okay? So looking at this, you probably think, how can you actually gain some sort of advantage? Now, if we take business owners, for instance, right? They will leverage their income through employees. So, their earnings will go up, and also they'll get back more time because, they got staff there that can, they can delegate and outsource different tasks to, which allows them to grow and also allows them to get more time. Now, investors do the exact same thing. Well, almost all high-level performers will use leverage via a team or some sort of staff. Then you probably hear of other forms of leverage. So if we look at the OPM model, which stands for other people's money, which I know many of you probably would have already heard of, where we may, look for angel finance, where we look for an angel investor to come in. We use other people's money. So we use an investor's money to put into a deal to really amplify our income, and then we give them a good rate of return. But we can't forget OPW or OPT, which is other people's work or other people's time. These are other things that we also need to be mindful of when it comes to leverage, because we can usually, we can use these two to really amplify what it is we're doing. And then also OPK, which is other people's knowledge. This is another thing. This is how you really fast track different things. It's why we pay people for coaches or mentorship or whatever, because we want to use the other person's knowledge and leverage their experience to really fast track what it is we're doing, and also learn the best ways, because they generally found out the hard way and they got a lot of experience. Then we can look at our network and try and leverage our networks. Those connections are also very, very important. But I'm going to give you another example on leverage. The next example I'm going to give you is a house, and this is how you can use financial leverage on the most basic model there is, which is property, okay? So let's just use the UK, for example. So a first-time buyer in the UK can get a mortgage on a 5% deposit, right? Now, of course, there's different criteria to this, but I'm just going to use, in general, 5% is what first-time buyers can get. So let's say this asset is worth £100,000. So we can put in £5,000 to this deal and now control this £100,000 asset, which has a great ratio of 20-1. So, as you can see, you can really utilize debt here and use leverage to try and control this asset for a very small amount of money. Then if we was looking at, a general investment property where we would put down, say, a 25% mortgage as a buy-to-let, which would then be £25,000, which is a 4-to-1 ratio. Again, using leverage can really amplify what it is you can do and amplify the outcome. So here we have a £100,000 asset, which we can control if we was a first-time buyer, £5,000, or if this was a second property or say a buy-to-let, and you just use the most basic way possible, put down a 25% deposit, being £25,000, we can control this entire asset at a 4-to-1 ratio. Now, of course, there's many ways to do this, and some of the ways that we discuss inside the 5D program, you can do this deal here for pretty much no money or very close to no money, or pull out most of your money, if not all of your money, out of this same deal and go again. But of course, there's different ways and means to do this. Now, to give you an insight on, how the super wealthy use financial leverage, right? So the global derivative market is worth over $2 quadrillion right now. That is a huge number and is very hard to actually get your head around. So let's take a look at some numbers in seconds. Okay, so if we move this across, and let's put a quadrillion up here at the top. Okay, now if we look at numbers in seconds, so if we look at a million seconds works out around 12 days. Okay, then a billion seconds works out at around 32 years. So as you can see, a million to a billion is already a huge difference, right? So when people talk about $1 million compared to $1 billion, we're talking about a massive difference between these two numbers, okay? Then if we look at a trillion, we're talking 32 years. So going from a million to a billion from 12 days to 32 years, then to look at a trillion at 32,000 years, these numbers are huge right now. To try and put a quadrillion even into perspective, right? A quadrillion is 1,000 trillion. So this is the sort of leverage that banks are using to amplify the outcome of their investments, right? So as you can see, there's many ways that you can do this, and why leverage is so important in not only the growth of individual investment portfolios, but the growth of global economy, okay? So we need to get comfortable with leverage. So, make sure that you have good risk management in place, and then leverage can serve you well. So remember, debt is good if it can be serviced. And, we can use debt to, buy real estate, businesses. You can use it to loan against your investment portfolio, which is also very tax efficient. But leverage can be your friend if you know how to treat it. So I hope you enjoyed the 7-step framework, and I hope to see you on one of our mastermind sessions soon.